Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn and Associates with your metals market update for this Tuesday, the 20th of June, 2017, about 1:35 p.m. Central Daylight Time. A small decline at this hour in all the stock indices, not to be unexpected. You've hit the upper Bollinger Band in a number of them. In the metal markets, a decline that has been shrunken. I mean, silver was down 16 cents. The gold market was down about $5, and you're getting a bounce, but they're all still lower. And the one that's in trouble is the copper. You know, copper was up about 250 to 270 points yesterday. It gives it all right back. Platinum is down at the expense of palladium, which is soaring today. Now, in the energies, and you always watch the energies on days like this, hard to figure what to do in the nat gas right here for a number of reasons, but think of Tropical Storm Cindy. They've now named it, and that's the one that's in the Gulf of Mexico. Does it impact any of our producers between Texas and Louisiana? I cannot answer that yet. We are getting still a bounce off the lows, but nothing material in gasoline and crude. And the reason is we get the API numbers today. They are looking for an approximate decline of 2 million barrels in stocks, under 1 million in the gasoline, and flat in the distillate. So we'll see what the heck happens and how those numbers look when compared in the morning with the EIA numbers. So let's take a look, if we could, at some of what's going on. In the gold market on the weekly chart, 1250 140 is the 18-month moving average of closes. Next support, 1215.20, all the way down into this 1215.20 area. 1232.60 is the 200-day average. Maybe you're going there, but you have to take out 1214.30 to hurt the overall pattern of higher lows and higher highs. If the market by month end gets back over 1250 140, traders will say, it was a successful test of that number. The market couldn't stay under it. If it stays under it, they'll say going into the month of July, these are still the key numbers. That's how I think they're going to talk about the market at month end. When we take a look at today's action on the close, we're going to settle the market at 1243.50, even though we're trading at 1244.70 right now. So this market has seen one heck of a break in it. To be honest, $55 from close to close at this point in this month alone. So that's a heck of a decline that we have seen. When you come into the down thrust, today's low is 1242.40, so that is from high to low so far. Could make a lower low, but it's doubtful going into the close, knowing where the settlement price is already. In terms of the swing line, you still have very much a pattern of lower highs, lower lows. 1258.60 is the number to take out to break that. And it's interesting because to do that, you have to get back over that monthly number of 1251.40. That's all that I'm saying. So I am tying some of this together and looking to see what happens. Now, these are our first 2 days under the 100-day moving average of closes. Normally, when you get under that 100-day average, the first time you bounce back. Now, it doesn't have to be as dramatic as this by any stretch of the imagination, but you're getting to that bounce period time. That's all that I want to say. And I am not bullish or bearish. I'm a technician. This chart is bearish. There is no getting away from that. It has hit its lower Bollinger Band, and it's riding it as it's doing that. It's not really getting away from it, but it is very oversold. So we have a market that's got a downtrend, a bias that is down since it's under the 18-day average of closes. It has hit its downside target of the lower Bollinger Band. It often tries to get back over after a couple of days that 100-day average, and it's oversold. That's my analysis of it. On the gold ETF, it is the same analysis. Let's start at the bottom. Oversold, lower highs, lower lows clearly. If you get over 119.50, it'd be a sign this market might be getting ready to challenge the 18-day average, but there's nothing bullish. Being oversold is not a reason to be bullish. Oversold can convert in time to embedding, locking in the downtrend. So both the futures and this contract fit into there, as do the gold mining ETF, GDX, which has got lower highs, lower lows all the way through and oversold. But you're at your downside targets, and that's my point. We'll see if the market can build on that, or if it, and by the way, build could be build for even more of a bear case, or build on it and try to end this downtrend by getting over 2220, not that far away. As we get to the gold-silver ratio, you're up to a new high if you closed like this, 75, 66 to 68. You were here yesterday, but the key is, I don't know the exact settlement price. It's literally right here, so we'll see what's going to happen. In the silver, you're riding the lower Bollinger Band. You're not even bouncing away from it. That's the difference between what we're seeing in some of those ETFs so far. But again, you're very oversold. And unlike gold, the 100-day average is up here. Gold is under it for the first 2 days. A very big difference, and they often act different because of that. In the copper market, as fast as you go up, you come down. So yesterday, the market finishes the day up 255 points, okay? And I think I said, I don't know what's going on. Why is that suddenly happening? And I'm going to repeat it. Now you're down 310 points today, and all this is happening back and forth against the 18-day average. The current pattern is one of higher lows, and back here was the higher high. The newer pattern is lower high, higher lows. So you're forming this. You're coming into a pennant formation. So just keep your eyes on that. In the platinum market, lower highs, lower lows, under the 18-day average, but very oversold. Again, the 100-day average is way up here. It's unlike the gold chart. And in the palladium market, which is more like the gold chart, to be honest, but not in the same, only in the sense that the 100-day average is under the market, you are still maintaining this interesting pattern where you've got the higher lows, okay, and the higher highs from back here. Admittedly, you can argue lower highs, higher lows. A difficult trade situation and a market that is overbought. Don't know what to do with that. In the dollar index, with all the hoopla going on, all you've done is go back to the upper Bollinger Band. You're not pushing it out. You're just riding it, and that is not the sign of the greatest amount of strength. You are overbought, clearly in an uptrend. I always teach, always, do not buy into Bollinger Bands. That's what I teach, and I'll stand behind what I'm saying. So you put that all together, and you've got to figure out, okay, what do we do? Well, in a time like this, you want to know what I do. And what I do is I offer you 20-day access to my free trial, my market research, if you haven't tried it before. If you've tried it, it's time to buy it. And it's inexpensive, folks. If you don't have a trading account with us, it's roughly $3 a day, business days. It's $60 every 30 days. It's not a lot of money. Your Starbucks coffee is more money than that. But if you take a look, I'm going to give you and start off the morning with a video. It's probably 10, 15 minutes long. It reviews all the markets. I'm going to tell you the morning fundamentals. I'm going to bring up the different ideas. I'm going to give you day trade, position trade ideas. I'm going to mention what our research here in the firm is talking about. We think that there's a big event happening in wheat. I'm going to explain why, how it all goes on, but it changes, obviously. Then I write a minimum of 2 reports a day. That doesn't include my gold report and other events that I do. You're going to get access to that. Have a telephone. I record and give you the oral buy and sell ideas twice a day as well. How do you get this? Give us a call. You can go to our website at www.iepstein.com. You'll see a carousel of free offers. You can click up here. You'll see an icon if you're watching me on YouTube. And underneath us, it says, click here for Ira's free offers on a number of websites that carry this video. Do so. The forms will appear. Take it from there. I'm Ira. You have yourself a great day, and I will see you all tomorrow.